What's up, everybody? My name is Joe Brown and this is Heresy Financial. If you've been paying attention to all of the proposed tax changes recently with the spending plans that they're trying to get pushed through, you might have also been watching the proposed changes to retirement accounts and retirement account laws. One of these proposed changes was to eliminate the Backdoor Roth contribution and the Mega Backdoor Roth contribution. These are strategies that allow you to get much more money into a Roth IRA than you can with regular contributions. This is seen as advantageous to many investors considering the significant tax advantages a Roth IRA can have over a traditional IRA. However, as of right now, those changes are being dropped from the proposed spending plan. They are preserving the backdoor and the mega backdoor Roth contribution methods, at least for now. So in this video, I'm going to explain exactly what the backdoor and mega backdoor Roth contribution methods are so that if you want to take advantage of them and you're concerned that they'll be dropped, you know exactly how to do it and exactly by when. Ready? Let's dive in. While the backdoor and mega backdoor Roth contribution methods are severely disliked by anybody who wants to eat the rich, they are not that well known. But before I can explain what they are, I have to make sure you understand the differences between traditional IRAs and Roth IRAs. If you already know, just skip forward. Said very simply, the difference between a traditional IRA and a Roth IRA is when you get taxed. On a traditional IRA, you get taxed on the money coming out. On a Roth IRA, you get taxed on the money going in. Depending on your age and your income level, you might think one is more advantageous for you over the other. The way that the traditional IRA works is that, let's say you make $100,000 this year and you put $5,000 of it into your traditional IRA. The IRS will then look at you and say, instead of taxing you as if you made $100,000 this year, you put $5,000 of it into your IRA, we're only going to tax you as if you made $95,000. That's how tax deduction works. You get a deduction for the amount that you put in. And just like all retirement accounts, there are limits on how much you can put into a traditional IRA. As of 2021, you can put $6,000 a year into your traditional, or if you're over 50, you can put in $7,000. Now, because you got the tax deduction on the money going in, you're going to pay taxes on the money coming out. So it'll grow over your career as you continue to put in more and you invest it. Then when you enter retirement, you start taking money out of it. It's just going to count as ordinary income. Every dollar that comes out, you're just going to pay taxes on as if it's just adding to whatever income you have on top of it. So that's the traditional IRA. The Roth IRA is basically the opposite. You make $100,000 this year, you put $5,000 into your Roth, you're going to still pay taxes on the full $100,000. You get no break for it. Many investors will choose the Roth option if they expect that account to be very large by the time they start taking money out of it, simply because they don't want to have to worry about paying any income taxes on all that growth. Just like the traditional IRA, the Roth IRA has contribution limits of $6,000 or $7,000 if you're over 50. However, there's one additional limitation, and that is whether or not you can directly contribute based on your income. Because if you're a single taxpayer earning $140,000 in a year, you cannot contribute directly to the Roth. Now, when originally coming up with these rules, lawmakers ran into an issue because they looked at this and they said, hey, there's a lot of money in traditional retirement accounts. If we allow people to take money from a traditional retirement account and move that into a Roth, we can tax them on all the money during the conversion. Yes, that will make us miss out on any of the taxes from that growth down the road when that was going to turn into income coming out of the traditional account, but at least we get to tax on it right now. We get to dip our hands into the honey pots now, eat the seeds at the expense of the later trees. So that's exactly what they did. They said, if you want to, you can take money that's in a traditional retirement account, convert that over into a Roth account, and whatever amount moves over, you have to pay taxes on as income right when it happens. So you make $200,000 this year and you've got $100,000 in your old 401k. You can move that whole thing over into a Roth. Yes, that's going to increase your earned income for this year, your ordinary income by $100,000. They're going to tax you as if you made $300,000. But if you've got the cash to be able to pay the tax bill and you've got a long time to let that investment grow, then you could potentially more than make up for it by converting that into the Roth IRA right now. What this also means is that if you no longer qualify to put money directly into a Roth IRA, you can just put money into your traditional IRA and immediately move it from there into a Roth IRA. That's a Roth conversion. So that's the backdoor Roth contribution. Put money into your traditional IRA, move it from there directly into your Roth IRA. This essentially means that anybody can get their money into the Roth IRA regardless of their income. Now here's where the fun starts. There's something called a mega backdoor Roth contribution. Now we know that IRAs, individual retirement accounts, have contribution limits, and this year it's $6,000. But something that has a much higher contribution limit is a 401k. Now, typically, 401ks are traditional in terms of their tax treatment and have contribution limits of this year $19,500. However, there are some plans that allow after-tax contributions by the employee up to $58,000 every year. Now keep in mind, you make $200,000 and you throw $58,000 of it into your after-tax 401k, you are not going to get any tax break on that. You're still going to get taxed on the full $200k. But here's where the magic of the mega backdoor Roth contribution comes into play. You've been putting $58,000 into your 401k already after tax every year. You've been able to save up a significant sum in there. Guess what you can do now? Just convert that into a Roth IRA. It's simply a transfer from one account to another, and now it's in a Roth, which all of the growth from that time forward is tax-free. You don't ever have to start taking money out of it like you do with a traditional. There's no RMD, required minimum distributions, and every dollar that comes out of it is tax-free. So it's rightfully called the mega backdoor Roth contribution because you're able to make mega contributions to your 401k after tax, and then take all that money, move it over into a Roth IRA, and then the growth from there is tax-free, and any dollar you take out in retirement, tax-free. So it's pretty clear now why these would be pretty high up on the list for anybody trying to find a way to pay for the giant spending plans that they're trying to push through Congress right now. So for anybody who wants to use this or is currently using this, this comes as great news that they've eliminated the changes and they're leaving them in place for now. But here's even better news. If this were to go on the chopping block, things were to get rearranged, new proposals put back in, and this was one of those things that's going to get cut again, the last time that was proposed, it was going to end in 2032, which still gives plenty of time to take advantage of this until it goes away. So what are the next steps? Well, number one, contact your employer to see if their 401k plan allows after-tax contributions. Even if you're not making enough money for it right now, it's good to have in mind for 2 years from now, 3 years from now, even if it is going to get canceled in 10 years, better to take advantage of it for 1 year than not at all. The second thing to do is to open up a Roth IRA somewhere so that you can convert money from your traditional retirement accounts into the Roth if that's something that will work better for you for your long-term gains versus what you're paying on taxes now. And if this whole time you're just thinking, why would I want to put any money into a regulated retirement account where the only thing I can do is invest in stocks and bonds and mutual funds? I've got you covered. If you want to invest in physical gold, silver, Bitcoin, and other cryptocurrencies, open up an IRA with I Trust Capital. You'll get $100 of free Bitcoin just for signing up if you use my affiliate link in the description below. Second, if you'd like to use your retirement account to invest in non-public companies, startups through platforms like Republic, use Rocket Dollar to open up a self-directed IRA so that you can invest in things like startups on platforms like Republic. So in summary, it is unsure how long these massively tax-advantaged strategies of backdoor Roth contributions and mega backdoor Roth contributions will be available. But as for now, they're still there for anybody who has the capability to take advantage of them. And keep in mind, you don't have to invest in the regular stocks, bonds, mutual funds. You can invest in other things. Just check out my resources linked below. As always, really appreciate you guys. Thanks so much for watching. Have a great day.